Bloomberg Audio Studios. Podcasts, radio, news. Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek, insight from the reporters and editors that bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Hi, everyone. Welcome to the Bloomberg Businessweek Weekend Podcast. Well, it was a busy week as we got the Fed minutes from the last meeting of 2024 and the final jobs report of the year, 2024 again. Also, a showing of the latest gadgets and tech and trends at CES in Las Vegas, of which NVIDIA's CEO Jensen Huang was a highlight, but did not impress investors. Plus, a huge story, the wildfires in Southern California. We spent a lot of time this past week talking about it. A lot going on. For the latest on the fires and all of the top business and economic stories, of course, you can always head to the Bloomberg and to Bloomberg.com.
Carol, you mentioned NVIDIA, and yet another mega cap tech name was on our mind this past week, and that was Apple. The world's largest company by market value. It's kind of like sometimes the world's largest company, sometimes not.
One, two,
sometimes
three.
we say it's like among the world's largest companies. It got a rare sell call from one prominent tech and media stock analyst. And yet, said analyst still likes the company. More on that a little bit later.
All right. Plus, Carnival CEO Josh Weinstein on what the cruise line giant can do for an encore on the heels of strong quarterly earnings to cap off 2024.
And details on how to discover flavor and savor life. It's all in a new book by professional taste tester. Yes, it's a thing. Mandy Naglich.
All right, all of this to come. We begin with that rare Apple downgrade. The call came from MoffettNathanson's Craig Moffett, a longtime and known analyst in the media and content distribution space.
This is largely a valuation call. So I want to be clear. Apple, we wouldn't argue with anyone who says Apple is a great company. We think that their AI strategy is a very sound strategy. I love the appeal of the fact that Apple has a low capital intensity approach to AI, that they have the trust of customers, and on and on. They have a lot of advantages. No one would dispute that. But it's trading at 33.5 times earnings. And one way to think about it is just think about the PEG ratio, if you will, the ratio of growth rate to of the multiple to growth rate. It's trading at a PEG ratio north of 3. The rest of the Mag 7 trades at a PEG ratio of around 2. So you're talking about a 50% premium even to the peers within the Mag 7. That just doesn't make sense given what are some very material risks. And you mentioned some of them. China is a very real risk, not just because the Chinese government, for obvious reasons, is going to be disinclined to allow Western language models in China. So you're going to have a domestic partner and share economics with them, but also because the Chinese handset competitors have gotten much stronger. Another risk that is not discounted in the stock price at all is the antitrust risk. And here I'm not talking about the antitrust risk in the cases against Apple, although there are plenty of them. The real antitrust risk that's very proximate is the risk in the Google case. Where
explain that risk to Apple. How is Apple at risk?
Because 25% of Apple's operating income comes from payments from Google. And the judge in the Google case has specifically said those payments are illegal. Now, you can imagine that there are outcomes where they still pay some or all of that, but you can't pretend that there's no risk at all when the judge has already said that Google is guilty and the payments they make to Apple are illegal. I mean, that's 25% of Apple's operating income. It's $25
Massive.
billion a year. And again, I love Apple just as much as everybody else, but there are very real risks that are simply not appropriately discounted in the multiple that Apple is being awarded right now in the market.
I want to zero in on the China risk and what exactly is because this is a story we've been talking about for years at this point, Craig. Like concern that, Chinese consumers are not going to buy as many Apple devices as they have previously. Switching costs are pretty switching barriers are pretty low in China because of these, over-the-top third-party apps. People don't get locked into the iOS ecosystem like they do in other countries because of WeChat, et cetera. What's going on in China in your view?
Well, I think the biggest thing that's going on in China is that the other handset manufacturers, Huawei and Honor and so on, have gotten much better. If you went back to the last big iPhone cycle, which was the 5G cycle in circa 2021, the Apple competitors at the time were significantly weaker than they are today. And interestingly, Huawei in particular, because the government of the U.S. Put sanctions on Huawei and limited Huawei's access to chipsets and that sort of thing. Huawei has had to sort of reinvent itself with domestic technology, and they've done a really good job. The handsets that they make are now fully competitive. They are not a replacement for Apple. I'm not suggesting that they are, but they have a really competitive offering. And so the market share opportunity for Apple is simply not what it was in the last big cycle. But you also have this time the government's thumb on the scales. And there's a couple of ways for that. One is, as I said, you're simply not going to have the Chinese Communist Party saying it is acceptable to have Western LLMs answering questions like what happened at Tiananmen Square. So you're going to have domestic partners in order to be able to offer AI. And that means a different margin structure and what have you. You also have a very real risk from tariffs. And it's not just, in fact, not even primarily, that Apple itself imports almost all of its components and, in fact, today imports all of its handsets mostly from China because they're assembled there. Even if they are exempted, as they were during the last Trump administration, you have the risk of retaliatory tariffs in response to American tariffs that could be related to the auto market or completely unrelated categories, but where foreign governments respond by putting tariffs on a company that is obviously quite highly identified with the U.S. Mm-hmm. So again, I don't want to suggest that any of these risks are base case risks. It's not like there's a 60 or 70% chance that any one of them will happen. But if you have all of these potential risks, all of which shouldn't be described as sort of a tail risks, these are really real possibilities in all of these cases that there are negative outcomes. And they ought to be reflected in the multiple of the stock with a more sober multiple, and they simply are not.
Craig, are Apple devices not seen as having the same allure to the Chinese consumer as they once did?
I don't know that that's the case. There are still Apple is still a brand with real cachet in China. But remember, you now have Huawei introduced a trifold phone, for example, where you have Samsung devices that have had foldable screens for a long time coming in from Korea. The gap between Apple and its competitors is not what it once was. There's simply no way to argue that that's not the case.
Your report, pundits who have watched Apple stock grind higher over the last several months have shrugged off the appreciation as a melt up on no news, but that's not quite right. And you go, there has been a lot of news, right? It's just all been bad. Why the melt up then? Why does everybody, I don't know, maybe it's a stupid question, but why does everybody continue to chase it and send it higher when there are some real threats in terms of, as you said, the DOJ case against Google that would really take out a big chunk of kind of the financial or the balance sheet, right, of that company, of Apple specifically. So why does everybody kind of continue to support it? Why do they chase it? Why is there the melt up?
It's a great question. Now, first, I should be clear, although the stock has climbed higher and higher over the last few months, it's only traded in line with the market. Mm-hmm. So to some degree, this is an indictment of the way the market overall is pricing equities right now, particularly in the face of rising interest rates and therefore appropriately higher discount rates. But I suspect, Carol, that the real issue here is that there is this narrative that Apple is the quote unquote safe choice among the Mag 7, and that It is such a strong consumer brand, has such an unassailable franchise that it's the safe place to be. And while that's absolutely true operationally, it's not a safe place to be if it's trading at 33 times earnings. It's a safe place to be if it's appropriately valued. But if it's already being awarded an extraordinarily high multiple, there's nothing safe about that, even if it is a very strong business model.
So if it gets down to 188, that's your price target, do you change your rating and do you say, okay, now you can come in and buy, or do you kind of still wait and see?
Well, we would certainly say what you want to get to is you want to get to a price where it's fairly valued, and if it gets below that, then there's actually an opportunity to buy it.
Okay.
And I certainly wouldn't argue that Apple doesn't deserve an attractive valuation. It's a great company. It's just that when you start to get to 33 times earnings, and again, a PEG ratio of north of 3, what that implies is that the market has already priced in an enormous amount of potential good news. And so you'd have to see something quite extraordinary to be able to say that over the next, call it 1, 2, 3 years, that the stock can actually deliver attractive returns given this starting point.
Okay, Craig, while we have you, you don't just cover Apple, you also cover Comcast, EchoStar, Charter, Altice, Verizon, and more. Charter Communications, it's your top pick for 2025, despite cord cutting accelerating, despite what's happening to pay TV. Why is it your top pick?
You know, it's funny. In some ways, it is the exact antithesis of what we were just talking about with Apple. Charter and the cable stocks have been given up for dead, and so they are extraordinarily attractive valuations. A company like Charter, remember, Charter was one of the best performing stocks in the S&P for a decade. It was up 23-fold, I think, over a decade. When it was buying back a ton of stock and had a really attractive levered equity return strategy. They suspended that strategy for a while in order to invest really aggressively in rural build-outs. And the market has seen the free cash flow yield go down during that capital investment cycle. You could argue that those are actually pretty good investments, but the market hasn't found them as exciting as the old strategy of buying back stock. Well, they've already said they're largely getting to the end of that strategy, and so they will, as CapEx starts to come down, they're going to resume their stock buybacks in a very big way. And it's a company that we see growing in the low to mid single digits, not sexy, but by the way, that's what Apple is growing as well. But growing in the low to call it low single digits, but it's priced for negative perpetual growth. And by our 2028 free cash flow estimate, we have this thing trading at a something like 33% free cash flow yield on 2028. That's an absurd valuation, and so I just think it's way too cheap and a really exciting opportunity at this price.
Hey, Craig, just one last question. It's funny, coming off the Golden Globes, I was kind of like, oh my God, it's just content coming from just all these different places and streaming and regular TV. It's just kind of nuts. But I am curious, as we look at where content's coming, and in particular streaming, other than Netflix, do you think the legacy media companies can navigate the change towards streaming in a clear way? And unfortunately, just got about 45 seconds.
Well, it depends what you mean by can they navigate it. Will they survive? Of course. Will it ever be as good a business as the old legacy cable network business was in its heyday? No, it's just not going to be as attractive a business because it's so much easier for customers to churn. That creates a less attractive revenue profile, a less attractive cost profile. But you will still have winners, and they may not be winners on the scale of Netflix, but Disney is still going to be all right in the streaming business. Again, it's just not going to be as good as the business that they are leaving behind.
Thank you so much. Really, really enjoyed this.
My pleasure.
And Happy New Year to you. Really appreciate it. Craig Moffett, founding partner and senior analyst over at MoffettNathanson, joining us right here in New York City. If you missed any of it, be sure to check out our podcast feed a little bit later on. You can find it at Bloomberg.com or on the Bloomberg.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
So we got a big read on the U.S. economy this past week. We had that monthly jobs report on Friday. We also got Fed minutes on Wednesday. You can read all about it. Check out our full coverage on the Bloomberg terminal. Simply type EcoGo or head over to Bloomberg.com.
Another way that we gauge U.S. economic activity is through what consumers are doing, including spending on leisure and hospitality. We recently got a reading on that when Carnival released earnings. The company expects record levels of cruise demand this year with no signs of a slowdown in sight.
For more on the business of leisure and cruises in particular, we recently caught up with Josh Weinstein. He's the president, CEO, and chief climate officer of Carnival. We talked to him just after the company reported earnings in late December. He kicked things off by sharing context on the business.
If you look at where we are today versus same time last year, we are higher in occupancy, higher in prices. As a matter of fact, it's historical levels for both, for each of the 4 quarters for 2025. So as I heard you saying before I came on, the demand for our cruises is pretty phenomenal.
Typically this time of year, Josh, how much of the following year is booked? How different is this than historical averages?
It's not. We don't give that out for various competitive reasons, but I'd say it's nicely higher. To give you a sense of the momentum, if you think about what was our booking activity, how much activity did we generate in the last quarter? So from the period of September through the end of November, that beat last year, even though we had less to sell. So we sold more for 2025, and we sold it at higher prices versus same time last year. And at the same time, we set a record for booking activity for the following year out. So in this case, 2026. So things are moving really positively across the board. And the great thing is, this is broad-based. So when we look back at 2024 and we look at our portfolio of world-class brands, we were actually higher, mid-single digit to mid-teens percentage-wise in our yields, in the revenue we generate per person per day, across all of our major brands, all of our major trades. So it's really gratifying. The team, our global team, has done a phenomenal job, and really a shout out to each and every one of them for doing what they do.
Okay, this maybe sounds a little bit stupid, but why do you think this is happening? I mean, and I'm just curious, what it is it? Tell us a little bit about it and remind us, because you do have a portfolio of brands, and it reaches across different consumers, if you will, of your brand. So give us an idea of why you think you are still seeing kind of record bookings.
We'll need an hour, right? I mean, there's so many reasons. The principle, and I remember being on with you a year ago and talking about what we'll call the price to experience ratio, and the price to experience ratio of a cruise versus the price and what you pay for a land-based alternative is nuts, right? I mean, the value that you get from a cruise for what we provide is night and day to what you can get on land, and people are recognizing that. And so we are casting a net much wider into the general population for people who will now consider cruising as a vacation alternative, people who have never cruised before. As a matter of fact, in 2024, we had over 10% more new to cruise than we did the prior year. So becoming more mainstream, breaking down myths, and that value gap is real. So we can still increase our pricing, as we've been doing the last few years, and be an incredible value. And I tell you, there's so many things that our teams are doing better and better every single day, from how we manage the revenue curve, right? The yield curve between the time we launch 2.5 years in advance to the time we sail. Our marketing is amazing. Our brand's doing a better job of creative marketing, getting in the consideration set, and then performance marketing, and make sure we close the deal and get the booking. You name it, we could talk about it all day, but everything is moving in a positive direction.
You know, I got to say, Josh, there's so much coming at us, and so many individuals and leaders, CEOs that we talk to say, you know what, we're kind of holding off until we get an idea, a clear picture of what happens in 2025. You are obviously optimistic. You see numbers and data in real time in terms of bookings. But I am curious about the upcoming White House. Is it good, bad, or neutral for your business?
We had a great relationship with the Trump administration the first time around. We had a great relationship with the Biden team, and I expect that great relationship will pick up with President Trump again. So, our job is to deliver amazing vacation experiences to millions of guests a year around the world. That is what we do, and we do it very well. And every single year, there is something, right? Because we are global and the macro economy and the geopolitics are what they are. When I was with you a year ago today, we didn't have Red Sea on the radar screen. The Baltimore Bridge hadn't collapsed. Hurricanes hadn't done the damage that they did in the United States. Government elections getting thrown for a loop in Europe, like the UK and now Germany. None of that was on the radar screen, and we outperformed our December guidance by $700 million. Our job is to deliver no matter what the world might bring, and we'll continue to do that.
So I do wonder, when you look at 2025, what macroeconomic factors, what geopolitical factors concern you the most, Josh, when you think about the company's 2025 performance potential?
Oh, man,
sorry, I'm asking you a question.
Yeah, that's all right. I'm not going to single anything out. I mean, like I said, our job is to deliver. We deal with whatever the world might bring. We are nimble. Our team is amazing at reacting as they need to. But more importantly, we are proactively doing what we need to do to position our ships with our guests the right way and delivering on board. So the world will turn, crises will come and go, and people will keep cruising.
You've been President, CEO, Chief Climate Officer since August of 2022. So you've been in this position for a couple of years. Relative to the last couple of years, how would you describe the health of the American consumer right now? Same, better, worse?
We're just seeing continued positive momentum. So I think it's hard to say anything, but it's just as good now as it has been for the last few years for us in particular, given the record yields that we're just coming off of, and we're building on top of that. And you got to remember, we're a global company. So yes, the United States is the biggest cruise market by far, and we're doing incredibly well in the United States, but we are also the biggest in the United Kingdom, the biggest in Germany, second biggest in Italy, second biggest in Spain, Brazil. So we have an incredible global presence. And the fact is, economic cycles come and go, crises come and go, macroeconomics will flow different times in different places around the world. So our portfolio approach of being in these phenomenal markets really serves as a great hedge for us, because things will come in their cycles and leave their cycles at different times.
So of those geographic markets that you mentioned, even those that you didn't mention, where you do operate, where you do play, where are you most bullish?
Oh, where am I not? If you think about cruising, right, and you think about our brands, we're about a third of the market, let's just say in broad terms. If you take the whole cruise market and you put it into a bucket with all of the vacation alternatives at the same time, we're about 2 to 3% of the overall vacation market. And so how can you not be bullish when we are so underpenetrated as a global industry? I mean, it is remarkable what inroads we can make by just getting people who have never cruised before to consider cruising. And I'll tell you what, I don't know Disney's strategy any more than anybody else does from the outside, but I do know that they talked an awful lot lately about reducing the investment in their land because they want to build more investment into cruise and double the size of their fleet. I think that is very, very telling, and I think it's a brilliant idea.
Okay. And you guys have invested in your fleet. And I'm also curious about, when I did a deep dive on the company and I got off at Grand Turk, you guys have a port there. And I am curious about these offshore destinations for Carnival travelers. How significant is the July 2025 opening of your Celebration Key private island destination to the company's full year revenue outlook? I am curious about how this moves the financial needle, these offshore ports that are yours, that you guys highlight.
Yeah, absolutely. They're a critical piece of our strategy. So even today, without Celebration Key, we've got 6 jewels in and around the Caribbean, and we took about 6.5 million guests to one of our destinations in that geography. That's about equal to the rest of the industry combined with theirs. On top of this, we've got Celebration Key, which is going to be a phenomenal guest experience built from the ground up for Carnival Cruise Line and their idea of fun and just a wonderful guest experience on board. And there's a lot that we could go into, but it's going to be phenomenal. Now, with respect to 2025, there's really not that much of an impact because we don't open until July with a handful of cruises, and then we build up. So for the corporation overall, it's only about 5% of our itineraries in 25 will touch Celebration Key. That ratchets up to about 15% when we get to 2026. On top of this, we've announced that we're doing some major investment in one of our other existing destinations, traditionally known as Half Moon Cay, and rebranded Relax Away at Half Moon Cay because it's a different vibe than Celebration Key. It is a beautiful tropical paradise, white sand beaches, and what we want you to do there is lean into the beauty and the pristineness of that location and the crystal blue waters and relax and enjoy yourself and unwind. And we're going to be able to marry these two types of experiences on the same itinerary. So you get the idyllic and the ultimate beach days across those portfolios.
Our thanks to Josh Weinstein, President and CEO and Chief Climate Officer over at Carnival.
And Tim, we had another development in the leisure and hospitality space, and this had to do with the largest U.S. ski resort. What's been their time of year when everybody's out there skiing. We're talking about Vail Resorts. Shares did bounce around this past week because you did see a bunch of workers, ski patrollers, who were out on not working because they wanted a new contract. They wanted more money.
I've been trying to get you to talk about this story for close to 2 weeks. And
I know.
We're finally talking about it, which is great. And it's great that I think for a lot of people, that this strike has been put to an end, because I don't know if you saw on social media, but back in late December 27th is when this strike began. You saw this playing out. You saw videos of long lift lines. You saw big parts of Park City Resort closed as a result of them not having the ski patrollers to actually patrol and do avalanche control in these areas. And it comes at a time when it's one of the most crowded times because people are out for the new year. They're out for the holidays. They're traveling with their families. They're spending, in some cases, Carol, tens of thousands of dollars to take their families to this mountain resort, and they're not having a good experience.
Well, speaking of money, I mean, the Park City Professional Ski Patrol Association, they did claim victory in this battle, saying in a statement that Vail Resorts, which owns Park City Mountain Resort, acceded to its key demands, including a $2 an hour base pay increase and raise for some ski patrollers. So win. All right, you're listening to Bloomberg Business Week. Coming up, what the next generation of people can expect during their lifetimes. You might want to sit down when you hear this conversation.
Okay, Gen Z.
Yeah.
There's such thing. There's Gen Alpha, which I learned about thanks to this interview.
And what about?
Generation Beta. They're next. That's next. This is Bloomberg.
This is the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Okay, we know about the greatest generation.
Check.
The silent generation.
Check.
Do you know there's a generation before the greatest generation?
What is it?
They are called...
Are you serious?
Yeah, the lost generation.
Oh, I do know that.
Yeah.
I do know that. Okay.
And then I guess we forget about everyone before that. But
right. And then there's...
That's neither here nor there.
Sorry, everybody. And then there's the massive boomers.
Boomers.
Gen X. Millennials.
Yep.
Gen Z.
Yep.
Then where else?
Then it gets a little complicated.
Yeah.
Gen Alpha. That's 2013 to mid-2020s.
Okay.
Those are my kids, I guess.
Okay.
And then now that we're in the mid-2020s, it's time for the next generation.
Dun, dun, dun.
We're talking Generation Beta.
Okay.
And they're born from 2025 to 2039. So most of them aren't even alive yet.
All right. So we're waiting. But
we're waiting.
Projecting what
there are a few of them.
What they're going to be like.
Happy birthday to them. Despite that, PGIM set out to figure out what this generation would look like. They interviewed doctors, scientists, parents, and more. 2,000 Americans to get predictions for the future of Generation Beta.
David Blanchett is Managing Director, Portfolio Manager, and Head of Retirement Research at PGIM. He joins us from Lexington, Kentucky. David, Happy New Year. Great to have you here with Tim and myself. So tell us about this project, because we really haven't talked about this next generation, Generation Beta. So tell us what you set out to do.
Well, first, you all kind of introduced this idea of generations. And you mentioned baby boomers. They were actually the first generation to kind of have a name it was associated with like a group of individuals at a certain age. And right, so we've kind of moved forward through time. You mentioned the boomers, Gen X, millennials, the alphas. Now we have the betas. So everyone born on January 1st, 2025, for the next 15 years is going to be part of Generation Alpha. And obviously, there's still a lot of those babies to come. But, we were curious, like, what might the future hold? Like, what are we looking at in terms of this newest generation? So as you all mentioned, a pretty exhaustive survey, reviewing kind of expert opinions, surveying 2,000 Americans, and lots of interesting perspectives people have about, things like life in general, retirement, longevity, just lots of interesting predictions about the future.
I mean, don't you think if you went back in time, I'm just trying to figure out a corollary here that makes sense, but if you went back in time, to the 1970s and said to folks, what do you think people born, in the 1980s to the 2000s would experience in life? Like, they're not going to be talking about smartphones and, AI. They're going to be talking about flying cars because that's what we thought would happen.
Right, exactly.
There's this disconnect between predictions and what actually happens, right?
Well, and so I think that's why, I think this is informative, it's useful, but it's really difficult to think about what's going to happen in the future, right? So, for example, one of the questions in the survey was like, what would you call this generation? And you just said it a second ago, but like the most common nickname was Generation AI. Like even 3 or 4 years ago, that probably isn't the name that we'd use to describe this latest cohort. So I do think there is a lot of things that are changing, but to me, like this idea of change was probably the biggest theme in the survey, where there's just lots of expectations where, kind of every facet of raising children, of saving for retirement, of planning for healthcare, people will change in the future, especially for this generation beta.
What about in terms of, I'm really curious about how we work, right? Here we are, 4 years off the pandemic. We thought it was going to be transformational. And I guess for some who are still working from home, it is, but there's a lot more people who are being pressured to come back to the office. How do you think about this generation, or what did you hear about how they think they will be working?
Sure. So 83% of respondents thought that retirement will look completely different for Generation Beta. And well, why is that? It's because there's this idea of mini retirement, and this idea that as we kind of evolve through the workforce, we're going to be changing jobs. So, other stats would be that 74% of people thought that Generation Beta would work less than 5 days a week. 80% of respondents thought that people would have 3 distinct career paths over time. So I think that there is this kind of emerging perspective that this idea of having kind of one job and one profession for, 30 or 40 years isn't the future of work based upon how things are changing.
David, is that because we're going to be living to 150? So yeah, we're going to have these mini retirements. We're going to have these mini, transformations in our careers.
So I think that people will be living longer. I focus on retirement research, and I don't think we're going to have most people living to 150, but we are going to see improvements in longevity, right? And those improvements kind of radically create complexity around on how we plan for retirement. And so to me, it isn't all that surprising that there's this perspective that, Generation Beta isn't going to retire. Right, to the extent that we can create jobs and create abilities to work longer. Lots of folks don't want to retire. Actually, personally, I don't love the word retirement. I like the word financial independence. What we want to be able to do is to save money and eventually stop working. And I think that's where we're seeing this perspective around Generation Beta, where they're going to be this, in theory, this group of individuals that doesn't have the same retirement as everyone else. That being said, a stat that blows my mind is that they're not going to be, age 70 until the year 2095. So retirement in 70 years is going to be very different than it is today.
Oh, to be young, born in 2039, sure would be nice.
Already, right?
Already, I'm thinking about it. One thing that I was surprised, and you're reminding me about this, is in a history class in college, I remember studying, I believe it was in like the 1920s maybe, the rise of leisure and the fact that people they weren't stuck in the fields 12 hours a day, 7 days a week, 365 days a year for the first time ever. So there certain things started happening, and I could be getting the dates wrong, and I know I'm overgeneralizing here, but I think if they were to look at our lives now, they'd say, oh, wow, those people never work. But when are we going to have like a 4-day work week or a 3-day work week? Because automation is going to be doing such a good job.
Are you asking for them or for you?
I'm asking for me. Okay. When are the markets going to only be open 4 days a week, and then we only have to work 4 days a week? That's what I want to know.
So, 74% of respondents in the survey thought that Generation Beta would work less than 5 days a week. And so I think that, again, there is this idea of work becoming more fluid versus this kind of structured 9 to 5 thing. Now, obviously, we saw, during COVID, a rise of remote work, people not having to be in the office to do their jobs, and a lot of companies kind of pull people back into the office. I think that there is this emerging perspective that this requirement to be, at a desk in an office 5 days a week, it's not gone, but it's kind of slowly evolving into something else that is a lot more flexible.
One thing I want to talk about is healthcare. We talked about longevity, and I feel like there's a bunch of things here in terms of your findings. Half of adults believing that cancer will be cured by Gen Beta. 71% predicting that Gen Beta will have individualized healthcare based on their DNA. And I feel like we continually, or increasingly, Tim, are having conversations about individualized medicine. Talk to us a little bit more about that, because it's an incredible cost to society. It's an incredible cost to individuals that we still haven't figured out some of these major ailments. So pull that together for us.
Yeah, I think that that's kind of an optimistic perspective. I too saw the 51% stat of thinking that Generation Beta would cure cancer. I think that to me, what resonates looking across the responses is just this idea again of kind of like the evolving state of healthcare. I think the idea of personalized medicine, there's some questions about like AI, things like that. I think the way that individuals can receive, treatment is going to change. And I think that was a key theme among the respondents in the survey. So healthcare, I think that people think is going to evolve in the future and radically affect Generation Beta in terms of how they enjoy their lives and also when they eventually retire.
Okay. Better get to work. I was kind of hoping cancer would be cured before then.
Fingers crossed. I would love to see that.
Yeah.
The other thing is just one more stat on all of this. 59% think AI, artificial intelligence, will be able to predict and prevent health issues before symptoms appear. And it's just, as you know, we have spent, you're in the investment world, the last 2 years talking about nothing but AI, generative AI, large language models, and so on, and the impact. Although I think people are thinking it's going to take a while for all of this to pay off and be put to work.
Yeah, I think one of the questions was like 60% of respondents think that AI is going to raise their kids. And so I think that there's a lot of positive expectations in here around artificial intelligence and how its role in terms of education, in terms of the role of kind of helping individuals have better personalized experiences based upon their unique preferences.
I'm wondering about technology and the folks you interviewed. How did their answers vary based on who you talked to? Because you talked to doctors, you talked to parents, you talked to technologists, you talked to scientists. How did they think differently about different generations?
Well, it's funny. One of the differences that I noticed with the responses was the older generations, like boomers, weren't as optimistic about the possibilities, the future of the Generation Beta. Beyond that, if you look at just like maybe at a higher level, if you look at things like regrets and the things that people would change based upon their lifestyles, you have things like saving for retirement and spending time with kids, things like that. Those were very different for older Americans versus younger Americans. So a lot of the questions, I didn't see big differences in terms of, looking at like boomers, millennials, Gen X, but you do see it in terms of things people say, well, like, what do I wish I had done differently looking back on my life?
Hey, having said that, I was kind of drawn to a statistics that you shared with our producer and our team. The people surveyed estimate that Generation Beta will need approximately $1.88 million to sustain in retirement. That seems like a low number.
I think it's all relative. It's a big number, but like I said, we're talking about people retiring, 70, 65 years from now. I think there are some really important things here. Like there was one, I think, useful stat that like 80%, think that Generation Beta should, like in a perfect world, start saving for retirement as soon as the child's born. And that's probably not realistic. I think most, I have 4 alphas myself, no betas. And that's retirement's tough, right? And so I think that one thing that will make retirement tough, as we talked about earlier, is this increasing longevity. But I also don't love that word, like I said, retirement. I think that it's going to be more possible for us to do things that are economically additive at later ages, right? And I mean, along those lines, like, one of the important stats in the report was that the number one regret of all respondents was that they didn't save enough for retirement. Okay. Well, what's really interesting is that is never the highest regret of any of the generations. So like not saving for retirement is this kind of regret that kind of echoes across generations, but it's never the biggest thing. Like if you look at like boomers, for example, they wanted to, spend more time with their loved ones and take care of their health, things like that. So I think that, we like, there is that big number, that 1.88 million, but I think what's important is things like not saving for retirement, was actually a bigger focus among younger respondents, but they were worried about like everything. Like they just have like regrets galore. As individuals get older, those regrets fade away. But to your question and point, retirement is very expensive. And if we start living to age 110, 120, it's even more expensive than today.
But is it also something that's more top of mind maybe for younger generation? Because it's not like when my dad retired and there was pension and VA benefits and Social Security and investments. I mean, there was all these different pools, and it's a very different environment for a lot of workers nowadays.
What is? I mean, so we've got, I think, like personally, I don't love the fact that the trust fund for Social Security is projected to go bankrupt in about 10 years. It creates a lot of uncertainty around like the bedrock of our retirement being there, but also like we've entered a world of personal responsibility for retirement savings. You've got to save in your 401k, in your IRA, things like that, and I think that that's a really good way to help individuals accumulate money for retirement. But you need to make sure they have access to a plan. But kind of a bigger problem to some extent is, okay, you get to retirement and you have, I don't know, $500,000, $1 million. It's like, now what? Like you train these people to save for 30 or 40 years, and all of a sudden you've got to figure out how you're going to spend down that money, and you don't know how long you're going to live, what the markets are going to do, and it's Social Security bankrupt. And so I think that we have a pretty good system, but it places a lot of responsibility on the shoulders of the average American, and that's where having help, having an advisor, using certain tools or resources, I think that's really becoming more valuable, because you only have one shot at retirement. You can't screw it up, and so getting help to figure out what the best thing to do is just becoming, I think, more important for all Americans.
Hey, are you concerned at all about a lack of Generation Beta actually appearing? Because childcare has gotten so expensive, and it's so expensive to have kids. I know I don't need to tell you how much you have to save for college, considering you have 4 of them, but it's just gotten so expensive. And I know my generation, fewer and fewer people are having kids. Is that a concern?
It is. And so it was really interesting is one of the questions they asked was, among those who aren't going to be having children, like, why is that? And so my wife is a veterinarian, and one of the top reasons was people are viewing their pets as a child. And, if you follow this trend in other countries, you see this in other places where individuals are kind of substituting having kids for having pets. And the number one cited reason often is just the costs and the time it takes to actually raise children.
All right, so we've just got a couple minutes left here, and I am curious, with all that is said and done, all that we've talked about, what is kind of top of mind for you guys? PJ, you guys invest. Like, I don't know, what are you thinking about this next generation, this beta generation?
So, to be perfectly honest, like, I'm not incredibly worried about 1-year-old saving for retirement, right? I think that it's going to be an issue. I think what we're probably more focused on is individuals who are investing for today. So I spend a ton of time thinking about, like, how do we create solutions for individuals who are around retirement? And to me, it does get to this earlier point just about where, everyone's retirement is their own. Right. And for better or for worse, we all have to worry about the markets misbehaving, about living a long time. And it's just really, really complicated. And so I think, at a high level, the job of all of us needs to be, when we're young, to make good financial choices, to save in our 401k and invest well. But the decisions you've got to make when you get closer to retirement just are really, really complex. And, I'd like to think that things are going to get easier for Generation Beta, but it's probably the opposite. And so hopefully, we can learn from a lot of the mistakes, for better or for worse, that individuals make today, so that future generations, as they retire, have things a bit easier.
I did a college calculator while I was away on break.
And? For what it's going to cost you for your kids?
It's not pretty.
What's the number you came up with?
More than $600,000 for a private, if you want to go to private school.
For one or for both?
For one.
For one. Good luck, honey. All right, David, we got to leave it there. Hey, listen, thanks so much. This was fun, interesting, and enlightening. David Blanchett, Managing Director, Portfolio Manager, and Head of Retirement Research at PGIM, joining us from Lexington, Kentucky. No, like, that's one of the things we talk about all the time, right? The cost of college.
Yeah, it's
it just keeps going up and up and up. Intimidating.
We'll see if it can keep going up and up and up. I know 20 years ago you were probably saying that.
Yeah, exactly.
And
I don't know that I ever thought it, but we've talked so many times, like over the years, about how it's been outpacing inflation, and it just continues to do so.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
Plenty ahead in our second hour of the weekend edition of Bloomberg Business Week, including the perfect guest for foodies. We speak to an award-winning taste tester on fine-tuning one's palate so we can really, really learn how to savor that flavor.
Plus, Mark Zuckerberg rocking a $900,000 watch. Yeah, that's like not that much money for him. $215 billion is his net worth.
Just under $1 million.
Yeah, coffee machines that'll change your morning rituals and non-alcoholic aperitifs to spruce up dry January. All courtesy of our team over at Bloomberg Pursuits.
First up this hour, it's a big luxury item that many of us probably won't get to experience in our lifetimes, and that is owning a private jet.
Owning a private jet, it's costly. It requires regular maintenance. You got to hire, you got to pay that flight crew, you got hangar fees. There's, of course, insurance and other costs. Those costs, Carol, they can exceed $1 million per jet.
Yeah, that's a lot. So what if you don't have to buy the whole plane to fly private? That's where fractional jet ownership comes in.
Michael Silvestro is CEO of the fractional private jet firm FlexJet. It's a division of the privately held Directional Aviation Capital. It provides fractional aircraft shares and leases as well as jet cards. FlexJet owns, operates, and maintains over 300 aircraft.
So just like everyone else, the pandemic brought travel to a halt. But coming out of the pandemic, we've seen a couple macro trends. First of all, people who had the ability, financial wherewithal to fly privately before the pandemic, who chose not to, are all in now. Convenience,
so they started
safety,
then and they've stayed with it?
Absolutely. Our retention rates of those that have come in after COVID are running 97, 98%.
Wow.
So if you have a sense, just to give you a sense of metrics, we were on a very, very strong run pre-COVID coming out of the pandemic. If you look at our book of business today from where we were 5 years ago, it's up 60%.
Wow.
When we talk who's flying, I know demographics have shifted quite a bit for you guys in recent years. You're seeing more and more young people now become part of the program, people in their 40s. What's the demographic looking like?
Yeah, Tim, the macro trend is younger, bigger, and longer. So a generation ago, a man or a woman would wait till maybe late 50s, 60s to start flying privately. Today, young men and women in their 40s are all in. Secondly, they're not starting with small airplanes. They're not starting small and moving their way up the food chain. They're in on mid, super mid, and heavy jets, and they're going all over the world. So the number of transatlantic crossings we did this summer to Europe were unbelievable. So people are just going everywhere.
Remind us, and our pursuits team often taps into this, but remind us of kind of the financials in order to be a customer on one of your jets.
Sure. Well, it really all depends upon your missions, which can be easily defined as where do you go, how often, and with how many people. And that kind of helps us create a profile of you and what airplane and services would best serve your missions. So, if you take a mid-sized airplane, Praetor 500 from Embraer, for instance, for us, the buy-in on a whole aircraft basis is about $20 million. So you end up saying, hey, I want to fly 100 hours a year, so that's about a $2.5 million check. And then your management fee and then your hourly rates roll up to, for 100 hours, you're talking about not quite $1 million a year in operating costs.
So when you say fractional jet, you're actually owning a piece of the jet.
Yeah, Tim,
that's different than other firms.
It is, and the model for us is that we own and operate over 300 airplanes. But when you buy a share, you're actually purchasing an undivided interest of a serial numbered aircraft that is part of our fleet. So as an individual owner, you can depreciate it, you can finance it, but then you allow other FlexJet owners to fly on your plane and vice versa. So the master interchange agreement allows the operating metrics to work.
So let's go with that Embraer, $2.5 million buy-in, and then operating costs that are associated with it. What are those typically?
Usually, well, for 100 hours a year, it's, by the time you do a management fee and an hourly rate, it ends up to be about $8,000 to $9,000 an hour.
So to make this, it's some people would say it's hard to make it worth it,
right.
No matter how much you fly. It's about convenience, it's about comfort, it's about time not spent at Newark Airport or whatever. Who's the typical profile in terms of like net worth that make this choice?
Yeah, so there's really two, I'd say, major constituents that fly. Ultra high net worth individuals that are using it for a combination of business and pleasure.
So these are people $30 million and above, typically net worth is what we think about with ultra high net worth,
That's
right?
a good benchmark. And then what we've seen recently is a lot of corporate flight departments are using Fractional and FlexJet to supplement their own airplanes. So they're not going away. People are still going to have aircraft in their flight department.
Right.
But rather than buying the fifth or sixth or seventh one, it's a smarter way to deploy capital where you just engage in a fractional share in addition to the airplanes that you fly yourselves.
All right, so who's using your jet card?
The jet card? So we have a very robust business that we own in the family of companies called Sentient Jet. So you buy a block of 25 hours. It's like a big gift card in the sky.
Right.
And you buy them in a category of an airplane, not necessarily a specific aircraft type. So that would just be for someone who's an occasional user that would average only about 20 to 25 hours a year.
Okay, so not too much.
And would you see the profile of that person is not an ultra high net worth individual. Maybe they have many millions of dollars, but they're not actually buying a $2.5 million share in an aircraft.
They would be, I would give you two examples. The difference would be perhaps they don't have the financial wherewithal or the net worth that a fractional customer would, but they might, and they would just only buy a jet card because of their frequency of use. So you could be very, very wealthy, but you just, hey, I have 2 or 3 trips a year, so it's not worth me investing in a fractional share and make that commitment. You just do a jet card.
What's the biggest business for you guys? Where do you make the most money?
Oh, fractional. So FlexJet's model, which is very, there's all these ways to get on board, but the beauty of the fractional model is our recurring revenue. So once you're in the family, once you've bought or leased your share, you're paying a management fee just like belonging to a country club. Whether you go for dinner or play golf, you still expect a level of service when you show up. You want the greens mode, you want a wonderful menu. Same thing for us to deploy and to have on the ready 300 airplanes around the world. That takes a significant infrastructure.
It also takes pilots. And one of the things that we've talked about a lot, I feel like, Tim, with people in the aviation industry is the shortage of pilots. How are you dealing with that? And tell us what color you can give us around that.
Well, that's a wonderful question. I would tell you that one of the things I'm the most proud of is that the FlexJet pilots on their own voted. When we bought the business, they were unionized, and they voted to have an at-will relationship with senior management as opposed to being represented by a union. So we have...
So from the get-go?
Well, that was about 6 or 7 years ago.
Okay.
So we have a wonderful relationship with our pilots. Couple things. Number one, we are committed to having the highest paid pilots in the sky. We also we really try to operate on a familial culture, and so we end up treating people with great respect and care, and we just know how to treat people.
Where do your pilots come from?
All over. They come a lot out of the military.
So those are on the younger side. Do you have folks who've retired from the big airlines?
We do. Not a lot, but because
there's mandatory retirement.
65. Yeah. So I just flew with a guy that had been with us less than a year. He was 66 years old, incredibly fit and competent.
Right.
And so we're happy to have him.
Is it hard to find them, though? That's what I'm just kind of going back to the demand supply.
Well, here's something else we did. We were noticing what our attrition rates were. And we noticed a couple years ago, because one of the things that speaks to our culture is we don't have a training contract. So we take you at your word. So if you apply and get accepted as a job as a pilot for FlexJet, we train you, we invest that money in you, and you are not obligated at all. There's no payback in case you leave us. So a lot of people were negatively profiling in us, coming, getting trained, and then leaving after about 2 years or so. So one of the counterintuitive things we did was we raised our minimums. So while everybody was in the face of a pilot shortage, you would think, well, you'd lower your minimums.
To attract more people.
We raised ours to 3,000 hours as a minimum.
So that's what you need to have under your belt in order to become a pilot?
FlexJet pilot, only 1,500 hours, so twice as much as what the industry calls for. And what we have attracted in the last 2 or 3 years since we've done this is someone who's more career-minded, that they want to come to FlexJet because they appreciate the culture, the compensation, the work rules, the environment, and our retention rates have plummeted since.
Where were they going when they were leaving?
To the airlines.
What do you find when somebody who owns a fraction of a jet wants to use that jet, but then somebody else is using it?
Well, that's the beauty of the model. That's not their problem. That's my problem.
Does it happen a lot?
No. We end up having the model. So we, as a company, we own about 20% of our fleet ourselves. It's called core fleet. So we don't commit out about 1 out of every 5 planes, and that's what we need to avoid what you just asked me.
Can you use data, AI, or something to help you figure out kind of what? I'm just curious.
Yeah, we're still, we have a very sophisticated scheduling program that we created ourselves, but then we also add very experienced schedulers that look at the board and say how we move things around to make sure that we take care of our customers.
I can only imagine. There must be like a room, or I don't know how it is.
So actually, no, it is a room. It's a beautiful, brand new, just year-old global command center that we built in Cleveland, Ohio, which is our headquarters, where we have visibility into our entire fleet around the world.
Pretty cool stuff. Mike, thank you so much.
Thank you for having me very
travels.
much. Merry Christmas to both of you.
Yeah, look forward to talking again in the new year.
Thank you.
Mike Silvestro, Chief Executive Officer of FlexJet, joining us right here at our Bloomberg Interactive Broker Studio. We love talking play.
This is the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Carol, I don't know about you, but when I'm giving gifts these days, I kind of like to give people things they can eat or drink.
I love doing that too.
Our Bloomberg Pursuits
team. And don't you like
team,
to get something that you can drink or eat?
I do.
Especially eat.
Like when you brought cookies last week.
That's right.
To everybody in the office who was here. That was
kind of fun.
She brought seven different types of cookies.
It was at least 7 different kinds, yeah. And I didn't even make them all.
They were so good.
Anyway.
Still thinking about those.
Well, things you can taste. That is something that Mandy Naglich is her specialty. She's a writer and consultant working in the beverage and travel space. She's also the author of How to Taste, a Guide to Discovering Flavor and Savoring Life. Welcome to Grace, so great to have you here. Tell us about, your certification that makes you kind of an expert when it comes to taste. You've got a book.
Yes, got a book, and I do have several certifications. I actually am a certified taster, which means I can taste all different specialty compounds, but I'm also a Cicerone, which is a certified beer taster and server.
First of all, how do you even get to do that? Like, what's the training involved to do that?
Lots of sniffing, lots of slurping, lots of memorizing things. I can literally smell different sulfur compounds when they put them in front of me in coffee and chocolate and beer, wine. They'll spike something and I'll be like, cis-3-hexanol, that really fresh sulfur.
So do you walk into a room like our studio and you're like, oh my God, like I'm smelling...
I can smell everything, but you guys smell great. Okay. So you don't have to worry too much.
But do you, is this something that anyone can do, or do you have more sensitivity than other people.
So everyone can train it. There's actually really cool studies that you can grow your olfactory bulb, which is how we understand smells, within 2 weeks of training.
Wow.
Just sniffing, really concentrating, like we're going to focus on these wines. What are you smelling, trying to remember it, and you'll change the way that you taste in 2 or 3 weeks.
Very cool.
Why should we do that? Like, what do you get out of learning how to kind of like think about smell when you're eating or drinking and so on and so forth? Why is that so important?
So think of watching a black and white movie, like that's what you're eating like right now, and then think of it in color. Think of all the depth, the way that you can relate all of your memories as you're enjoying everything that you taste. It basically makes every sensory experience more deep and more memorable, which is what we want to live life for.
Is it hard work for you, though, in the sense of like when you go out to a dinner with a friend, you're not necessarily enjoying it as much as somebody typically would because you kind of feel like you're working?
So I've been doing it for so long that I believe there's a place for every taste. So even if something is a little, not my favorite, I totally understand why it's there and I can appreciate what's going on. I think everything that we experience is just a memory we're making, and there's a place for everything.
You're like, somebody's like, this tastes so good. You're like, actually, it doesn't. And here's why. I'm going to tell
Tasting
you
is
why.
so subjective, though. It's even our genes. Certain genes.
Yeah, but come on, Mandy. There's times you're like, no, it could be much.
No, that's legit bad.
There's some genes when we get to this red wine. If you don't have the right gene, you might literally just not taste the floral notes.
I love wine. And so tell me about, like, all right, let's start with this first wine and kind of what we should do in terms of understanding the smell and why it's important and what you do smell when you.
So this is the Garzon Albarino from Uruguay, which is a pretty cool wine region.
Yeah.
And what we're going to do is first, you just want to smell it a little bit further away.
Okay.
Just see what you notice first. This is going to be your top notes, the most powerful notes in the wine. And then we'll get closer and give it a little swirl and smell again. Are you guys getting some like fresh fruits on this? This is actually the newest vintage, the 2024 Garzon. I feel like it's so melon forward. It used to be a little bit more pear and
Are you getting melon?
Oh, I got melon.
Yeah, you get that
getting
cantaloupe
melon.
instead of the pear. I don't know.
Nice.
All right, so we can give it a little taste.
Okay.
I love this wine because it's not too intense. It can pair with pretty much any food. So I feel like you can show up at a party and no matter what your host is serving, you're not going to overpower their dinner. It pairs with everything, and it's, under $20. So you could bring 2 bottles, one to serve, one for them to keep later, and still have it be a really good guest.
Are you finding as you do this that, because we talk a lot about this, that there are, yes, some really expensive wines that are incredible, but more and more there are some great offerings that don't cost that much money but have the smell, like all of that is there.
Right, we're getting all this lush fruit on this, right? Which is what people look for in like a Sauvignon Blanc, the savvy bee girlies out there. But for the price of a good Sauvignon Blanc, you're going to be paying way more than this, under $20 price limit. And this has got all the complexity, the right intensity that you want to be paying for that white. So you're getting the flavor without the price tag, just because it's from a little bit of a different region. It's from Uruguay in South America.
Are you ever working with a customer and you're like, you do this for a winery or so on and so forth, and you're like, this is terrible?
Never say it's terrible. Okay. I will say there's 7 different ways to smell something. So, sometimes we have to get into 6 and 7 before we're really enjoying it and praising the wine. But this one, I feel like right on the front.
It's lovely.
It's so lush.
I'm not
fruity.
a white wine drinker, but this is lovely.
Yeah, and great for a
really
party. If you're a red wine drinker, though.
I am a red wine drinker. So tell me what we've got here.
So this is the Rioja from Faustino, and they are kind of the Rioja producers. This is the 2014. It just hit shelves, so we were just talking about it in the green room.
What are we smelling?
Do you get that big plum note?
Yes.
The last vintage did not have all these like black dark fruits like that currant.
God.
And the nice thing is, if you want to pick this up and taste all those dark notes, they come with these little like wine markers right now. So you can pop it on your glass. It's on the top of the bottle. It's like a little gift. So, you're not going to sip my brown Faustino marker. So, as you're going through the night, enjoying your glass, one thing you can worry about with tasting, if someone else's bad breath was in your glass, you're not going to have to worry about that when they're marked.
I have to say with my family, large family, like we all have our little like charms that we put on our glasses to make sure like we don't mess up. Like, that's my wine.
Yeah.
We have that too.
Right?
Yeah, and if we're somewhere where we don't have that, we use different colored rubber bands.
Do you really?
Yeah.
Okay,
Yeah.
perfect. And it's such a small little gift. Like, I think when you give people wine glasses, you don't know what's in their cabinet, and you can just be like forcing them to store something else. Like a little extra wine charm isn't going to take up your drawer space.
So tell us again, like what we're getting here.
Yeah, so we should be getting some like really dark fruits on the nose, and then you guys just took your sip.
Sorry, I jumped the gun with the sip.
You get like a little spice at the end, right? Like it kind of ends with almost
really
a little bit of
nice.
black pepper, and what will sit on your tongue after is kind of that powerful spice note and that really stewed plum.
What is this good with?
So this, you'll need a little bit more of an intense food. So
Yeah.
kind of like some red meats, things like that. A
That's
really
what I was
rich
thinking.
cheese would be so nice with that, because you get that nice tannin at the end. So
Nice
something
legs
like
on
a
it too, yeah.
exactly something like a Gouda, and then a sip of this after. It's gonna kind of balance it out perfectly. You're not going to have too much richness on your palate.
So this is a $37 bottle of wine.
Yeah, under $40. We
Yeah.
love that.
That's great.
Yeah, exactly.
And I don't know if we said that the Garzon was $17.
Yeah, under $20.
And we got some white wine. We got some red wine. We got a little bit of bubbly, Carol.
We have a little bit of bubbly. And listen, let's go there and tell us what we're smelling.
So first I want to say, just look at the shape of your glass too. You see how it's a little different?
Yeah.
With bubbly, we're going to have rims that tip in a little bit because the bubbles are actually forcing aroma out of the glass or out of the solution, and it's going to all collect right there. So this is our special champagne glass. Don't let anyone serve you in a flute.
Okay.
And
really?
Why?
Because it doesn't collect that glass, right? So all of your aroma is just shooting out, and there's no way to get your nose in there.
You know, it's so funny. I was just going through glassware at home, and
yeah.
Get rid of the flutes?
Unless you're doing a big toast where no one wants to taste the champagne, like you have 100 people, that's what a flute is good for. But if you're trying to taste this Pol Roger,
this is what you want.
You want to get your nose in.
Okay, so what do we? All right, so I know. All right, we're going to continue that. All right, tell us what we're smelling.
So this is Pol Roger, and unlike a lot of champagnes that have those really bright apple notes, this is like a little buttered brioche. It's a little bit sweeter, and if you taste it, it has a lot more body than a lot of champagnes.
Yeah.
It actually is 3 equal parts of 3 different grapes.
Oh my gosh.
Ooh, that's good.
So you get that structure that kind of weighs on your palate a little bit. And I think sometimes when we're sipping champagne at New Year's, it kind of zips right off your palate. It's appley and it's gone. I love that this kind of hangs around and stays on your palate for a little bit.
That's nice.
And as a gifting champagne, it comes in a beautiful gift box and it's under $55. So a lot of those gifting champagnes will be over $100. This one I think has the flavor, has the complexity, and hits you at a really nice price point.
The first bottle of this or this brand sold in 1849.
Yeah, 175 years ago.
Love that.
Sticking around.
History there.
Yeah, exactly.
You do coffee, you do wine, you do beer.
Chocolate.
Tea. What's your favorite?
Oh, my favorite. Oh, good question. I mean, I do love bubbles, but probably my favorite is getting into like the dark spirit space. Love a little whiskey tasting, a little dark rum.
Hey, explain how your business works, like who brings you in and who you do consulting for.
Yeah, I work across restaurants, bars. I do things like private jets. We just had a private jet person on working with those companies. And basically what I'm doing is making sure every palate that walks into the door is going to have something pleasing to them. So whether you like sweet, sour, really intense, less intense, we're going to make sure the drinks menu or the dessert menu offers something for everyone. And what we don't notice is the way that we all taste is a little bit different.
Right.
So just genetically, there's certain flavors you can't taste. There's people who think everything is super bitter. So I kind of know the lay of the land, what percentage of people are going to think things are really bitter. And I make sure the restaurants know what I know as well.
I was just having this conversation this week with my wife and her parents about cilantro, because it's like this very polarizing thing to put on tacos, for example. Some people think it tastes like soap. There's a whole portion of the population. There's a whole portion of the population thinks it tastes fine. Why does stuff happen like that?
So this is totally genetics, and the more scientists dig into our genes, same thing, a third of people can't taste violets at all. They don't know they can't smell it. It smells like nothing to them.
Wow.
You can live happily your whole life without smelling violets, but when we know that, you're not going to put a violet cocktail on a menu, right?
Oh.
Same thing with these genes in cilantro. There's also bitterness. Like I said, there's 5 types of bitterness, and there's 25% of the population can't taste 3 of those types. So to them, it's just not going to be bitter.
You know, in the break, we were talking a little bit about, and we were talking so much about smell and how it impacts us. But the color of a store or restaurant or something, and even in your book, you talk about, you know, throwing your next dinner party where the thermostat should be. And I just,
where should it be?
What are the things that we need to think about, like when we're serving food or wine or just kind of that setting, especially something like a dining room or something where we're going to be eating and drinking a lot?
Yeah, going back to the Faustino Rioja is actually a perfect example. See how it's like so opaque and you kind of can't see through it?
Yeah.
Our brain just sees this rich color and we immediately already think, ooh, expensive, ooh, fancy. There's a lot of wines that are great that have a lighter color, but our brain just sees this rich red and thinks, sweet, I want to taste that. Red is one of those colors that we reliably can trace to being, that we crave it and that it's a little bit sweeter. So knowing all different things, you know, about how you want to serve a wine, how you want to serve a cocktail. Certain cocktails, if they're not so attractive, if they have that kind of pale color, we'll put it in an opaque glass so people can't see what it looks like and they're only getting the flavor. You don't want to let your eyes play tricks on you, you
like
know?
all these things that like kind of play.
Yeah.
At play. What?
The science around smell. You mentioned that scientists, doctors are starting to associate loss of smell with certain ailments. What's the research there?
Yeah, so the size of your olfactory bulb is actually a really great indicator of overall brain health. And scientists at the Monell Center have been researching smell loss, and they think it's the earliest sign of dementia and Parkinson's. But there's no good, consistent test for smelling. You know, you don't go into your physical and smell a lemon every single time. So a lot of people don't self-report, oh, things don't smell as strong to me. And really what scientists are starting to push for is a physical, at your physical, when you're little, you start doing a smell test, and they can trace your smell your whole life. So when that starts to drop off, you can start kind of combating or testing for any kind of brain deterioration. Also, people with larger olfactory bulbs weren't as affected by COVID, and they didn't tend to get long COVID. Those studies are still coming out, but really just focusing on taste and keeping that little part of your brain healthy seems to affect your brain as a whole.
Yeah, no, I feel like the more we learn kind of how it all works here, certainly our body. Mandy, what a treat. Thank you so much. For Tim and I, we're getting ready to head out for the holidays. We won't be around next week, although there'll be a lot going on at Bloomberg here. But what a great way to wrap up our week on this Friday. So thank you so much. Really appreciate it.
A little toast to the holidays, I think.
A little toast.
Yeah.
I'm trying to think which, should I like pull up two hands and
there we
toast
go.
both?
You gotta
a little
drink
three-way.
one, so then you can have one in each hand.
Yeah, exactly. You can toast while you're drinking.
This is something, yeah. I'm going to do a little bit of both. But first, we got to wrap up our show. Mandy Naglich, as we said, check out her book. She is a consultant, works in the beverage and travel space. Her book is How to Taste, a guide to discovering flavor and savoring life.
This is the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Meta out with news this past week, but what we noticed was Zuck's fancy and pricey watch, Tim.
More on that, and in what feels like a few Pursuit stories that are like tailor-made.
Totally for you.
For me. The best coffee machines for the perfect pour over.
Yep, and it's 5 o'clock somewhere, and in dry January, well, you can have some coffee, but it also means it's time for a mocktail.
You know what that means. It's time for Bloomberg Pursuits. Here with more, the editor of Bloomberg Pursuits, Chris Rouser. Chris, I want to start with the watch scene around the world. Of course, as Carol mentioned, Meta in the news for a host of reasons over the past week, but you and the team over at Pursuits around the world couldn't keep your eyes off that timepiece that Mark Zuckerberg had.
Well. Some international news happens, and you need to call me to come talk about it.
That's how we roll here.
How does it feel?
Everything
Carol
going on
and
around the
Tim?
world, when we got to go to you. What's up with that?
So Mark Zuckerberg made the announcement about the end of fact-checking across Meta, and Andy Hoffman, our reporter in Geneva, he was in the video. He's just sitting in a small room. You can't see where he is. He has a little necklace on, nondescript clothes and a big watch. And Andy Hoffman in Geneva emailed me and the news editors and said, I know that watch. That's a very expensive watch.
Like right away, right?
Yes. Early in the morning. And I was like, let's do it. Let's do this story.
Can I just tell you, we talk about expensive watches all the time, but this
Yes.
is something special.
Yes. So this is a Grubel Forsey handmade one watch. I wrote about this watch in 2019 when it first came out, and we put it in Business Week because it was so unusual. 95% of it is made by hand, including tiny, tiny, tiny wires that are the springs that make watches work. It's incomprehensible to me how they do it by hand. And so we shot it for Business Week, and there was only one because they only make like 2 a year, and it was very hard to get it. But this is like a total grail watch for people, and it has been since they started making it. There's only a handful in the world, and they cost almost $900,000.
Okay, a pretty penny.
Order
for,
up 2 or 3. Oh, wait, there aren't 2 or 3 available.
If you're worth more than $200 billion like Mark Zuckerberg
do this,
is,
right?
you can totally do this. One thing that we've noticed about Mark Zuckerberg over the last couple of years is his change in style. He's sort of embraced a different look than that.
Can we say he's getting fancy?
The vibe is not fancy.
I don't know if that gold chain is fancy, but
come on.
But he's kind of turned into a watch guy.
Yes, he has.
So it's not just this that's part of his collection. He has this growing collection.
Yes, he has Patek Philippe's. He has FP Journes, which is another like sort of cult watch collector brand, although they make a lot more of those. But these Grubel Forseys are really only available to a very small number of people. They make about the company as a whole only makes about 250 watches a year. Robert Downey Jr. has one. Sam Altman from OpenAI has one, a different one. And we did a story about this company earlier in the year, and the headline was, these watches used to be the secret of the ultra rich, not anymore. And it's because these tech people are wearing them and you see them around and they're so big, like you can't miss them.
Does it assume that Mark Zuckerberg has a deeper appreciation for really finely made watches? I mean, there are lots of watches out there that you can spend money on, but this is something else. Or is it just that he can, help me understand?
The response on, I don't know Mark personally, but
that makes one, two,
come on,
three.
Chris.
That makes three of us.
The response on the internet has,
Admit it didn't say.
from watch people is that, like, oh, okay, he really gets it. Like, he understands what like a really cool, like a very interesting, important watch is, rather than just some other watches that are just sort of expensive for being expensive. The watch nerds applaud this ownership.
Well done. It's so funny. First of all, can I just tell you, love my co-host. I never think he drinks coffee. I do.
Well, that's because I only have 1 cup a day at home.
And I'm finding out that it is not just your ordinary cup of coffee. You are kind of a coffee guru. You care about like your devices in it and like.
Not only that, I mean, I spent about an hour cleaning the espresso machine last night. I'm not joking at all.
Okay. Wow.
Exactly.
The machine that I have doesn't look like any of the machines inside the Pursuit section. Mine's very old school. There's like this tech-enabled approach to coffee that has taken off over the last couple of years, in part thanks to some folks who've quit Apple and been like, I can make a better mousetrap.
Yes, make a better coffee filter. So we did a story for this coming new year about pour-over coffee machines. So you have an espresso machine, right? So, but pour-over is, for a lot of people, they like waking up in the morning. They like the ritual of making a single cup of coffee from a single filter, pouring it over slowly. And they also believe that, like, for a normal drip coffee, this is the only way to get all of the apricots and essences of toast and whatever people say on the back.
Chris, I remember what it was like before I had kids too, okay? Because that's how people who don't have little kids enjoy a cup of coffee in the morning.
It must be quiet where they are in the morning. I can't imagine.
Am I just a peasant with my French press? Yeah, right, I am.
You're kind of, I mean, French press makes good coffee, and it's good. That's good for making multiple cups of coffee. So, like, when people come over, we'll do that. Yeah. Anyway, sorry, Chris.
All right,
we interrupt you.
Oh, yeah. Well, no. I mean, this is Tim. I think you actually know more about this stuff than I do. But these pour-over machines are basically doing what you would do if you did pour-over on your own, which is, like, in a lot of cases, it's a single serving worth of beans that are ground, like right there. You grind them, and then the hot water is poured over, and you can choose the size of the bean, the size of the grind, the heat of the water. But basically, it does kind of what you watch a lot of like baristas constantly doing, which is taking the portafilter, filling it with beans, moving it over, putting it on the espresso machine. It's like that, but for pour-over coffee.
I mean, you need coffee to make a cup of coffee. Pour-over
but
coffee.
Just the movement of the filter from the ground beans to where the hot water comes from is a big part of what these machines do for you.
It does take a long time for an individual to do this themselves. And Carol, you and I were traveling a couple years ago somewhere. I don't remember where it was. And on the way to the venue, I stopped to get my first cup of coffee for the morning, my only cup. And I ordered a pour-over, and they told me we don't do pour-overs in the morning because they take so long. Yeah, we're only doing drip coffee right now. And I was really disappointed because...
Did you walk away in a huff? I can't remember.
No. I still ordered a coffee.
He's pretty friendly.
But it goes to show that, yes, it's a very manual and laborious thing to do. Yeah. And for years, they've been trying to get machines to make as good of a cup of coffee. Have they pulled it off?
Yeah. I mean, so Matt Kronsberg, our writer, who is a total coffee guru as well, much more than I am, says that these are legit very good. So, one of them makes just like a single serving, and then some of them make batches. One of them you can actually set a timer. Like when I used to drink coffee in the morning, I just wanted it to be ready when I was awake, and one of these will do it. So the XBloom Studio, which is a new device from this company XBloom, it's $499, and this is from the Apple alum that you mentioned. There's actually a lot of Apple alums that have gotten into this space. And then if you want more of a batch, you can use the Fellow 8-in, which is $365, and that comes with like small and larger brewing baskets, so you can do the preset timing for that one.
But they do a lot of stuff, these machines, right?
Well, they also do blooming, which is something that I hate that I know about, but
because you're not a coffee guy. You're
I am a coffee
guy.
person, but I stopped drinking coffee in the morning.
So what is blooming?
The blooming is when you pour hot water on beans, on ground beans, to release the carbon dioxide before you actually brew, before you actually pour it through to filter through to brew your cup of coffee. And so if you some machines do it, these do, but if you do it yourself, you'll watch you pour hot water on the ground beans, and it sort of bubbles, and that's the carbon dioxide releasing before you can get like an even more pure expression.
Let's talk about Dry January. Woohoo! Because we actually recently, live on air, had someone bring in a couple of bottles of wine.
Yeah, Libby Wines came in. A new company out of Northern California.
Got it.
They have like a heritage in winemaking.
And okay, this is really terrible because Tim and I have tried some non-alcoholic stuff and it wasn't so good.
No, it's mostly bad.
Yeah, this was good.
Thank you for saying
Yeah.
it,
We
Chris.
enjoyed this.
Yeah.
But it's happening, right?
It has been happening for a while. People have not figured it out until, I would say, the last year or two. In terms of, like, they've been figuring it out for a while, but in terms of what you're going to get at a restaurant or a store, I've only tasted stuff that's decent in the last year or two. But now their wine particularly has gotten pretty good. And we, Kat Odell, who's like a very, very cool food and drinks writer, wrote this story for us about how these companies are figuring it out. And in the year that ended in June 2024, zero proof drink sales rose 24% to 199 million in the U.S. So, this is a big growing thing. And people not drinking is affecting the, like, LVMH, like Moet Hennessy. Like, a lot of the big wine and spirits and champagne companies are softening because of this.
And are they starting to then say, we need to embrace this, right? Which is kind of cool.
Totally.
You guys highlight a handful of cool stuff. I got to tell you, I haven't tried one thing that's on this list.
A lot of this is new.
Okay.
Yeah.
So that makes sense. But what I've noticed is that you're actually getting non-alcohol versions of full cocktails. Like when I go and order a mocktail at a restaurant, it's like it's not trying to be a non-alcoholic version of a real drink. It's something completely different.
Yeah,
basically
sometimes.
on a different part of the menu.
That's true. I mean, you can get a phony Negroni.
Yes, you can. I do like those. Those are the ones that are made in Brooklyn.
It's pure sugar. Yeah,
it is pure sugar. Yeah.
That is something we looked at that's the thing that we and it wasn't.
The Libby wines had no added sugar.
You know what I thought was really interesting? I have no idea of all the stuff that's going on. A couple of things that caught my attention. Elderflower, which I have done kind of the alcoholic version.
Yeah.
It feels like it's having a moment. There's that, and then there's like Alice Cooper getting involved. Who would have thought?
Yeah, this is a great example of the kind of pre-mixed thing that you were talking about, Tim. And I have to read this from the paper because there's so many words in this name. But it's the Whistle Pig Whiskey Sex Drug Rock and Roll Dry Old Fashioned. And it was a collaboration between Whistle Pig, which is a whiskey maker, and Alice Cooper. And apparently it's great. It's sort of a blend of alcohol-free rye whiskey, cordyceps mushrooms, Chisandra berry.
Interesting stuff. But it's Alice Cooper, so you'd expect maybe some interesting stuff in there.
So the fact that Whistle Pig is putting its name behind this, I think, is a big deal because Whistle Pig makes a whiskey that a lot of people really like.
Yeah, correct.
So they're not going to want their name associated with something that is probably not up to par with what they're known for.
Yeah, there's a risk to it. Like, sure, they want to get into this market. Sure, they want to put their name on something so that an NA drinker can have it on their bar, but they can't have it be bad. So, they took time. The brands like that have taken time and care with figuring this out. The other thing I really like from this list is French Bloom, which is the champagne. Champagne was a little faster to get to tasting decent in the non-alcoholic space, I think, because you got the bubbles, it's sort of crisp.
Yeah.
But this French Bloom, if you have it, it's really great. It tastes like champagne. It is champagne, and you feel just as celebratory when you're having it.
It's not cheap either. It's $119, right?
Yeah.
For a bottle?
750 milliliters.
Okay.
I'm just saying.
That's enough.
Seems good.
Got to say, it's a great list. So, Tim, it's a list
try it.
you need to work on. And we have to get more of those guys in studio and gals, and then also have Chris join
Okay,
us.
I'll buy the Deschutes Patagonia collab. You can get that, $100
Chris
bottle.
and I are doing that champagne.
I'll bring the $900,000 watch.
Fair.
All right, Chris, thank you.
That's Chris Rouser, editor of Bloomberg Pursuits.
And that wraps up our weekend edition of Bloomberg Business Week from Bloomberg Radio. Thank you so much for joining us.
I'm Tim Stenovec.
And I'm Carol Massar. Have a good and safe weekend. Bottom ups, everybody.
This is the Bloomberg Business Week podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business App. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.